SA 560 subsequent events. This is nothing but the definition of subsequent events. Subsequent events can be defined as the events which occurs between the date of financial statements and the date of auditor's report, and subsequent events also includes facts that become known to the auditor after the date of auditor's report, but before the date the financial statements are issued, and had the auditor is of the opinion that if the auditor is of the opinion that had these facts were known to him at the time of issue of his report, he would have given a modified report. Examples of the subsequent events. Two examples are given. I have given you several other examples. You can just go through it. Subsequent events as per financial reporting framework. We classified subsequent events into two broad groups, adjusting events and non-adjusting events. What are adjusting events? Those events that provide evidence of conditions that existed at the date of financial statements, and non-adjusting events are those events that provide evidence of conditions that arose after the date of financial statements. Examples of non-adjusting events were also given. Declaration of insolvency of a major debtor of the entity between the date of financial statements and the date of auditor's report, providing evidence on the recoverability of the money due from the debtor as on the date of financial statements, settling. These are the examples of adjusting events. Examples of events providing evidence of conditions that existed at the date of financial statements. These are nothing but examples of adjusting events. These are nothing but examples of non-adjusting events. That is the end of question number 1. Next, question number 2. What are the objectives of the auditor under SA 560? Point number 1. Objective number 1. The auditor should have to obtain sufficient. I said to you that it is the responsibility of the auditor to identify subsequent events, to classify them into adjusting events and non-adjusting events, and to ensure that all adjusting events have been properly adjusted and all non-adjusting events are properly disclosed in the financial statements. So for that, auditor should obtain sufficient appropriate audit evidence about whether events occurring between the date of financial statements and the date of auditor's report that require adjustment. That require adjustment means adjusting events, or that require disclosure means non-adjusting events in the financial statements are appropriately reflected in those financial statements. What is meant by appropriately reflected? Adjusting events are required to be appropriately adjusted. Non-adjusting events are required to be appropriately disclosed. That is the major objective behind following SA 560 by the auditor. So it is our responsibility as an auditor to identify subsequent events, to classify them into adjusting and non-adjusting events, and to ensure that all adjusting events are properly adjusted and all non-adjusting events are properly disclosed. For that, you need to obtain sufficient appropriate audit evidence about adjustment of adjusting events and disclosure of non-adjusting events. And how the auditor should respond when the auditor comes across facts after the date of auditor's report, and if the auditor is of the opinion that had they been known to the auditor at that date may have caused the auditor to amend the auditor's report. In such case, how the auditor should have to respond. Guidance with regard to how the auditor should respond in such cases is also given in SA 560. That's it. The next one. This is most important. This is most important. I have explained you several audit procedures that are required. You are made responsible to identify subsequent events. Of course, if management is having some knowledge of subsequent events, it is their responsibility to communicate such subsequent events to the auditor. But primarily it is our responsibility to identify subsequent events. Management's responsibility is generally said to be limited to identification of events occurring. If anybody has not listened to SA 560 in the past, I cannot do anything. Only for those sake, I cannot explain the entire SA 560 again. So please refer to the earlier videos if possible. Okay. So auditor is required to follow some procedures. You cannot identify subsequent events unless you follow some procedures. So what are the procedures that are required to be followed by you as an auditor to get some knowledge of the existence of subsequent events, or to identify subsequent events? That is question number 3. What are the audit procedures that are required to be followed by the auditor relating to events occurring between the date of financial statements and the date of auditor's report? The auditor shall perform audit procedures. Why? To obtain sufficient appropriate audit evidence that all events occurring between the date of financial statements and the date of auditor's report that require adjustment have been identified, that require disclosure have been identified. That is the reason why I said that it is the responsibility of the auditor to identify events occurring, identify subsequent events, to classify them into adjusting and non-adjusting events. To identify the subsequent events, auditor need to follow some procedures. This point is irrelevant. Don't try to read that. The auditor is not, however, expected to perform additional audit procedures on matters to which previously applied audit procedures have provided satisfactory conclusions. If you have already carried out some procedures which reveal some subsequent events, in that case you are not required to follow additional procedures in respect of such identification of subsequent events. Don't try to follow that. Next one. The auditor, this is a general point, the auditor shall perform the procedures required above so that they cover the period from the date of financial statements to the date of auditor's report, or as near as practicable thereto. That is the reason why, if you remember those procedures that we discussed, I said that usually those procedures are directed towards events or transactions that has happened or that took place after the date of balance sheet. The procedure, the following are some of the examples of the procedures that we discussed in the past. 1. The auditor should go through the minutes of the meetings of the board of directors or shareholders that were held after the date of balance sheet. The auditor should verify cash flows, budgets or forecasts, etc. that have been prepared by the entity after the date of balance sheet. Why we are focusing on things that has happened after the date of balance sheet? Because such things are to be considered as subsequent events. So if you really want to identify subsequent events, what the auditor is expected to do, you need to follow some procedures directed towards events that occurred after the date of balance sheet. That is the meaning of point number 3. The auditor shall perform the procedures required above so that they cover the period from the date of the financial statements to the date of the auditor's report, or as near as practicable thereto. The following are the examples of audit procedures that are required to be followed by the auditor. This point was also explained to you in detail. Management's responsibility is to identify events occurring after the date of balance sheet. Subsequent events also includes obviously events occurring after the date of balance sheet. If you are having knowledge of the procedures that were followed by the management to identify events occurring after the date of balance sheet, the same old procedures can also be followed by the auditor to identify subsequent events. That is the reason why, first of all, the auditor should try to understand the procedures, if any, that are followed by the management to identify subsequent events or events occurring after the date of balance sheet. Obtain an understanding of procedures, if any, established by management and followed by management to ensure that subsequent events are identified. And this is a general point. Inquiring management are where those with those charged with governance as to whether any subsequent event have occurred which might affect the financial statements. Point number 3. Auditor should read the minutes of the meetings of the owners, that means shareholders, or management, or those charged with governance that have been held after the date of the financial statements. Another point I told you is, in case of a company, minutes may be immediately recorded. But whereas in case of a partnership firm, a meeting of the partners would have taken place, some important aspects would have been discussed in that meeting, but the minutes of the meeting may not have been prepared yet. In that case, to ascertain what has been discussed in such meetings, it is your responsibility as an auditor to have a discussion with the management and try to ascertain what were discussed by the management in such meetings for which dash is not prepared. Minutes are not prepared. Very good. And inquiring about matters discussed at any such meetings for which minutes are not yet available. Reading entities' latest interim financial statements. Don't use the word subsequent. The actual word used in SA 560 is shown to you. Auditor should go through interim financial statements that are prepared subsequent to the date of balance sheet. Interim financial statements itself means financial statements that are prepared subsequent to the date of balance sheet. I haven't explained these procedures. Just like that, I explained these procedures along with the way in which they help the auditor in identifying subsequent events. Apart from this, 1 or 2 more procedures were also explained to you. I don't remember the other things that I discussed, but probably you would have written them in your running notes. You can go through that. Legal counsel, inquiring legal counsel, etc. or some other procedures that are available for the auditor. Enough. Such information may also be obtained by the auditor from accounting records pertaining to the period after the date of financial statements and reading entities' latest available budgets. That is another procedure. When, as a result of procedures performed, the auditor identifies events that require adjustment or that require disclosure, the auditor shall determine whether each such event is appropriately reflected. That means adjusting events are properly adjusted, non-adjusting events are after all that is the reason why we are made responsible to identify subsequent events. We are made responsible to divide them into adjusting and non-adjusting events. Since we haven't had any discussion about written representations, this point is automatically understandable to you after completion of SA 580. I am not saying that this point will be there in SA 580, but once you are able to understand the basics of SA 580, this point is automatically understandable, but still I will try to just read it. Try to understand it now itself. The auditor shall request the management, and where appropriate with those charged with the governance, to provide a written whatever aspect the auditor wants to take a written representation from the management, the auditor is at a liberty to take such written representations from the management. That all events occurring subsequent to the date of the financial statements and for which applicable financial reporting framework requires adjustment or disclosures have been adjusted or disclosed. Usually, before signing on the auditor's report, of course, you can take these written representations at an interim date, but generally, before signing on the auditor's report, auditor will try to get written representations from the management. In SA 580, I will explain you that even written representations received by dash from dash are also considered as audit evidence. Even written representations provided by the management and received by the auditor will also be considered as audit evidence. Without considering audit evidence, you cannot form an opinion. Without forming an opinion, you cannot express an opinion. That is the reason why it is generally said that auditor need to obtain written representations from the management, particularly as nearly as possible to the date of auditor's report. so that that information could also be used by the auditor for the purpose of forming and expressing an opinion on the financial statements. Please read it again. The auditor shall request management or those charged with governance to provide a written representation in accordance with SA 580 that all events occurring subsequent to the date of financial statements and for which applicable AFRF requires adjustment or disclosure have been adjusted. You will ask the management to make adjustments to dash, to disclose dash. It is the responsibility of the management to do that. We don't know whether management has actually done it or not. For that, again, we need to verify. Instead of doing that, you can verify, but apart from that, you can also take a dash from the management, written representation, wherein management should confirm to the auditor that, very good. They have actually made dash to dash and dash to dash. We need to check, we need to get a confirmation from the management that management made adjustments to all dash events, adjusting events, and made disclosures of all non-adjusting events. Meaning of the date the financial statements are issued to third parties. Third party may be shareholders or law enforcement authorities like ROC, etc., or regulatory authorities like SEBI, etc. Have I explained that? Meaning of date the financial statements are issued. It reflects the date that the auditor's report, it reflects the date that the auditor's report and audited financial statements are made available to dash, made available to third parties. The date the financial statements are issued generally depends on regulatory environment of the entity. That itself, that statement itself is partly correct. Why? Because I said to you that here third parties may include either owners, that means shareholders, or law enforcement authorities like ROC, etc. Annual return may have to be filed. And the third one is regulatory requirements like SEBI, etc. So once the report has been issued from the hands of the company to any party, any such party is technically called as a dash party. If the report is between the auditor and management, then that report can be manageable by the auditor. Once the report is issued, auditor need to follow the procedure specified in SA 560. In some circumstances, the date the financial statements are issued may be the date that they are filed with a regulatory authority. Since audited financial statements cannot be issued without an auditor's report, the date that the audited financial statements are issued must not only be at or later than the date of auditor's report, but must also be at or later than the date of auditor's report is provided to the entity. Unnecessary point. Unnecessary point. Issuance can be done only after the auditor has given a date to his report. That's it. Next. That is about question number 3. Now, question number 4. What are the audit procedures relating to facts which become known to the auditor after the date of auditor's report, but before the date the financial statements are issued? What we discussed earlier about this, when such facts are known to the auditor, it is the responsibility of the auditor to first of all identify whether such facts requires any adjustment or any disclosure. Facts are nothing but subsequent events. They would have taken place in between the date of financial statements and the date of auditor's report. Auditor should be able to identify all such subsequent events. somehow or other the auditor missed to identify such subsequent events at the time of issuing his report, and the auditor came to know about such subsequent events after the date of issuance of the auditor's report, but before the date the financial statements are issued to third parties, and therefore the auditor started feeling like this: had these facts were known to me before the issue of auditor's report, I would have given a modified report. That means as of now, the auditor has given a clean report. In the opinion of the auditor should have given a modified report, and this opinion has been changed because the auditor came to know about certain facts. So, in the view of the auditor, modified report should have been given, but unfortunately, auditor has given unmodified opinion. That means the opinion given by the auditor is wrong or is inappropriate. That obviously increase the auditor risk to the auditor. In that case, if you were the auditor, what procedures are you expected to perform? First of all, try to understand the facts or subsequent events. Try to divide them into adjusting and non-adjusting events. Try to understand how they can be reflected in the financial statements. If you are of the opinion that financial statements need an amendment, if you are of the opinion that financial statements need an amendment, why financial statements need an amendment? You found some adjusting events which are not adjusted. You found some non-adjusting events which are not disclosed. So obviously, not only the auditor's report, but the financial statements prepared by the entity would also go wrong. So you know very well that financial statements are wrong. Auditor's report issued thereon is also wrong. In that case, what the auditor is expected to do? Auditor should make a communication with the management, asking the management about how they are going to address this issue. The management says that, sir, whatever you say, I will follow. Then the auditor says that your financial statements need an amendment. Some of the items are required to be adjusted. Some of the items are required to be disclosed. So make an make an amendment to your financial statements. Prepare a new set of financial statements. Approve such a new set of financial statements. In the new set of financial statements, you are required to ensure that all adjusting events are properly adjusted and all non-adjusting events are properly disclosed. Then approve the same, provide the same to us. This is what the auditor should ask the management. If the management immediately accepts or agrees to make dash to dash, to make amendments to the financial statements or to prepare a new set of financial statements, there would not be any problem to the auditor. The intention of the auditor is that management should have to prepare a new set of financial statements. Management agreed to prepare new set of financial statements. There would not be any row between the auditor and the management. There is no problem to the auditor at all. In that case, management would have prepared a new set of financial statements, would have made required adjustments or disclosures in such new set of financial statements, and would have been approved again by the management and may be provided to you. In that case, if you were the auditor, what is your responsibility? It is your responsibility to check whether all required adjustments are properly done or not. It is your responsibility to check whether all adjustments are properly done or not. It is your responsibility to verify whether all disclosures are properly made or not. So you need to check whether everything has been correctly done by the management or not. Apart from that, excellent. You need to extend the audit procedures to the new date of auditor's report. Since management had prepared a new set of financial statements, the auditor is also expected to give a new audit report. Original report is different, this report is different. But remember, original audit report is a clean report. New report would also be a clean report. But original audit report is wrong, new report is right. That is the reason why the auditor needs to issue a new report. A new report is required to be prepared and issued by the auditor. In that case, there would be a gap between original audit report and new subsequent auditor's report. And who is made responsible to identify events that occurred between original audit report date and new audit report date? It is your responsibility to verify whether such events were also identified, classified into adjusting and non-adjusting events, and made appropriate adjustments are disclosed in the financial statements. Then issue a new auditor's report. Have I explained this? Read this. Another point is also explained, but first of all, if you are able to understand up to this point, I will try to repeat that point and I will read it. Actually speaking, the auditor has no obligation to perform any audit procedures regarding financial statements once the auditor's report is issued. However, when after the date of auditor's report, but before the date the financial statements are issued, a fact becomes known to the auditor that had it been known to the auditor at the date of auditor's report may have caused the auditor to amend the auditor's report, then the auditor shall discuss the matter with the management or those charged with governance, determine whether there is any need to make amendments to the financial statements. If so, inquire how management intends to address the matter in the financial statements. If management amends the financial statements, then the auditor shall carry out audit procedures. What is meant by audit procedures? Checking whether all adjusting events are properly adjusted or not. Checking whether all non-adjusting events are properly disclosed or not. Yes or no? Carry out audit. I cannot spare more time than this on SA560. Please try to understand me. Okay. So I'm under the impression that I completed SA560, but I'm having a fear that if you are also under that impression, you may not go through SA560, the given material. In that case, you'll be in problems. So to resolve such problems only, I decided to repeat this. Otherwise, it is a waste of time for me. Carry out the audit procedures necessary in the circumstances on the amendment. Extend the audit procedures already referred to the date of new auditor's report and provide a new auditor's report on the amended financial statements. These procedures are to be followed by the auditor when the management agrees to make amendments to the already prepared set of financial statements. Followed? Please answer. The point, the new auditor's report shall not be dated. The new auditor's report shall not be కొన్ని మాటలు అనేటప్పుడు జాగ్రత్తగా ఉండాలి. The new auditor's report the new auditor's report shall not be dated earlier than the date of approval of the amended financial statements. Management prepared new set of financial statements. They may have approved new set of financial statements. If the date of approval of new set of financial statements is say 30th October, can you give a date to your report as 29th October? Even before approval of financial statements, can you carry out audit procedures and can you issue an auditor's report? No. That's it. This is a good point which was not explained to you at that time, because I don't know whether this point is going to be included in your material or not at that time. Okay, next. This point, some portion of this point is explained to you. In some entities, management may not be required. Management may not be required by applicable law or regulation or financial reporting framework to issue amended financial statements. What is the literal meaning of this? Auditor requested management to make amendments to the financial statements. Management said that, sorry sir, we cannot amend our financial statements. We are not required. We don't want to amend our financial statements. Then auditor asked the management about the reasons. Management said that the law governing our entity, he allowed us not to make or not to prepare a new set of financial statements or not to make any amendments to the existing financial statements. So we want to go by law. So we don't want to make any adjustments or amendments. We don't want to prepare a new set of financial statements. This would be a reply given by dash to dash. In that case, what will you do as an auditor? What we discussed earlier. Without making necessary adjustments, don't issue the financial statements to a third party. But unfortunately, management had issued the report to third parties. In that case, what the auditor should do? auditor should have to take a legal advice. And how taking legal advice will help the auditor in protecting his skin was also explained to you earlier. Good. Now let us try to focus on 5B first. What is that? 5B. In some entities, management may not be required by applicable law, regulation, etc. to issue amended financial statements, and accordingly, when management is not amending the financial statements, there is no question of issuance of a new report by the auditor. And accordingly, the auditor need not provide an amended or new auditor's report. However, this is important. However, when management does not amend the financial statements in circumstances where the auditor believes they need to be amended. What is the meaning of this? On one hand, the auditor is of the opinion that financial statements of the entity need amendment. On the other hand, management is saying that they don't want to make amendments because the law governing the entity allowed them not to make any adjustments or amendments to the financial statements. So the views of the management and the auditor are differing, yes or no? In that case, what the auditor should do? Now let's focus on point number B first. If the auditor's report has already been provided to the entity, most of you people may not be able to understand this sentence. I will try to explain this sentence also while having a discussion on point A. Okay, we already knows that we already issued a report. Then only we came to know about some facts. So the auditor's report has already been provided to the entity. Later on, the auditor came to know about some facts, and the auditor requested the management to make amendments to the financial statements. Management given an answer to the auditor saying that they are not interested in making amendments because law governing the entity allowed them not to make any adjustments. In that case, what the auditor is required to do is the thing that we are going to discuss. The auditor shall notify. In that case, the auditor shall notify management, etc., and to those charged with governance if required, not to issue, don't issue, hey, without making necessary amendments or adjustments, don't issue the financial statements to third parties and the auditor's report thereon. That is the thing the management auditor wants to notify to, need to notify to management, not to issue the financial statements to third parties before the necessary amendments have been made. If the financial statements are nevertheless subsequently issued without the necessary amendments, the auditor shall take appropriate action. Appropriate action means the auditor shall seek preventing reliance on the auditor's report. That he can do by taking dash. Followed or not? Now let's focus on point A. This is an absurdity, but since it is given in the standard, I need to substantiate it. Okay, I am the auditor. I have already prepared financial statements. Sorry, I have already prepared my auditor's report. It is yet to be given to the management. I have not yet issued that report to the management. It is prepared. It is ready to be issued to the management. In meantime, the auditor came to know about certain facts. Have you observed any difference between the previous one and the present one? In the previous case, auditor came to know about the facts after the issuance of the auditor's report. Now you haven't issued the auditor's report. You are yet to issue the auditor's report. Meanwhile, you came to know about certain subsequent events or facts. In that case, what will you do? First of all, you will ask the management. You will provide an opportunity to the... Obviously, you need to provide an opportunity to the management every time. Just now we are about to issue our report, but just now we came to know that there are some subsequent events which should have been identified by us earlier, but we failed to identify such subsequent events. Now we came to know about such subsequent events. They require some adjustments or disclosure. So what do you do? Is the question to be asked by the auditor to the management. Management is willing to make adjustments. There would not be any problem at all. However, if management is not willing to make adjustments, then what the auditor should do? the financial statements are not reflecting, may not be reflecting a true and fair view. In that case, the auditor has to give a modified opinion. Are you able to follow this or not? Opportunity is given to the management. When the management has not availed that opportunity, you know very well that the financial statements contains dash material misstatements. They may be pervasive, may not be pervasive. When the financial statements contains material misstatements, what type of appropriate report should the auditor issue? A modified opinion. So issue a modified opinion. You haven't issued your report, change the report from unmodified to modified, issue it. Read point number 5A now. If the auditor's report has not yet been provided to the entity, not yet been provided to the entity, then the auditor shall modify the opinion as required by SA 705 and then provide auditor's report. Followed? Now the thing that was not explained to you, I felt that this point may not be included in our material, but unfortunately it was included. This point is somewhat difficult to understand. So I will try to explain the point first, then we can read the given material. Auditor had issued the auditor's report to the management. After issuance of the auditor's report, but before the financial statements are issued to third parties, auditor came to know about certain facts. Facts are nothing but subsequent events. And the auditor is of the opinion that the financial statements now requires dash. The financial statements now requires either dash or dash. Either adjustments or disclosures. In that case, what the auditor is expected to do? You will insist the management to make necessary adjustments and necessary disclosures. In order to make necessary adjustments or disclosures to the already prepared set of financial statements, what the management is required to do? They need to prepare a new set of financial statements. Therefore, the auditor asked management to prepare a new set of financial statements, to approve it again and to provide the same to the auditor. The already prepared financial statements by you are wrong. Prepare a new set of financial statements, approve it and provide it to us. This is the direction given by the auditor to the management. Now, the reply given by the management is more important. Management said like this: we are very sorry, sir. As you said, we cannot prepare a new set of financial statements. No, we can't do that. We cannot prepare a new set of financial statements. But what we can do is, we can make adjustments to the already prepared financial statements. What the management is telling to the auditor, we cannot prepare an entirely new set of financial statements and we cannot again approve it. Instead, what we can do is, we can make changes. We can make changes to the existing prepared financial statements. Whatever you require, we make change to the existing set of financial statements. We don't want to prepare a new set of financial statements. We don't want to approve them again. Then the auditor asked management, why you are giving this type of answer? Management said that the law governing our entity, what is that? The law governing our entity has not prohibited us. Has not prohibited us. What is meant by not prohibited us? Allowed us. Allowed us. The law governing our entity allowed us not to prepare a new set of financial statements, but to make adjustments to the existing set of financial statements. Therefore, we can make adjustments to the existing set of financial statements. We cannot prepare a completely new set of financial statements and we cannot reapprove them. This was the answer given by management to the auditor. If you were the auditor, what should you do? There is no other alternative. Do that. At least do that. Then the management made adjustments to the already prepared financial statements. In that case, how the auditor had to tackle that situation? What procedures should the auditor follow in that scenario? Two options are given. Option number one, the auditor may try to include. Why should you issue a modified opinion? Whatever you mentioned has been done by the management. Yes or no? You said that some adjustments are required to be carried out. Management has done that. You said that some disclosures are to be made. Management has said that, has done that. So whatever the auditor wants has been done by the management. Then what is the question of issuing a modified report? Where is the question of issuing a modified report? No, you cannot issue a modified opinion. You have to limit yourself to issuing an unmodified opinion only. But in that case, two alternatives are given to the auditor. Alternative number one, the auditor may try to include an additional date. The auditor may try to include an additional date in his report. In that case, auditor's report contains two dates. Yes or no? What are they? Date of original report, date of another date, new date, second date. When the auditor's report contains two dates, what does it implies? It implies that readers should understand that if you were the reader of the financial statements and auditor's report attached to it, if you were the readers of the financial statements and auditor's report attached to it, then you must have observed that there will be two dates in the auditor's report. In that case, how to interpret those two dates? Reader should understand those two dates in the following way. The first date implies that audit is originally concluded or completed by the auditor by that date. The second date given by the auditor in his report may signify that some additional procedures were followed by the auditor in between the first date and the second date, and the second date has been given by the auditor. That means all required procedures were followed only up to dash. This is very important. All required procedures have been followed by the auditor only up to first date. Then few more procedures were followed by the auditor between first date and second date. Those few procedures that were followed by the auditor between first date and second date are relatable only to dash, only to facts, or only to subsequent events which were failed to be detected by the auditor. Yes or no? In that case, auditor is not required to focus on subsequent events occurred in between these two dates. I'm not asking you, I'm declaring you. I'm giving a declaration to you that in this case, auditor need not focus on events that occurred between first date and second date. Whereas in the previous discussion, I said to you, you said a particular point. What is that? Extend. So when you extend audit procedures, the transactions between the first date and the second date or new date of new auditor's report should have to be considered by the auditor. Here the auditor need not consider those things. But auditor's report will contain two dates, first date and second date. Followed or not? If I were the auditor, I won't follow this. Why? Because reader is unable to understand even a single date. When I have inserted two dates in my report, the reader will certainly not be in a position to understand it. He may try to raise different questions also. So instead of giving two dates in my report, if I were the auditor, I would have preferred the second way. The second way is auditor may include an emphasis of matter paragraph. Auditor may include an emphasis of matter paragraph describing all these things in detail. But the problem with emphasis of matter paragraph is that such a paragraph can be included by the auditor only when the same has already been included by the management in the financial statements by way of notes. Yes or no? So always it is not possible for me to follow second way, that is inserting an emphasis of matter paragraph. That is the reason why two options are given. What is the first option? You can include another date in your report. In that case, auditor's report contains how many dates? 2 dates. Or else you could include a separate paragraph in your report called as dash, emphasis of matter paragraph. Are you able to follow this discussion or not? Now read this. When law or regulation or financial reporting framework, when law or regulation or financial reporting framework does not prohibit management, that means allowed the management from restricting the amendment of the financial statements to the effects of the subsequent events. So already prepared financial statements are adjusted to the effects of subsequent events, causing that amendments and those responsible for approving the financial statements are not prohibited from restricting their approval to that amendment. The auditor is permitted to restrict audit procedures on subsequent events to that amendment. In such cases, have you understood the paragraph? What is the meaning of that paragraph? Management do not want to prepare a new set of financial statements. They need to adjust whatever the auditor wants to adjust. In that case, management will reapprove only such adjustments. Auditor is also required to perform audit procedures only in respect of such adjustment. In that case, you are not giving a dash report. Neither management is giving a dash financial statements nor the auditor is giving a dash report. Neither the management is issuing a new set of financial statements nor the auditor is giving a new report. In that case, what the auditor is expected to do? The auditor should amend his report. Amendment here not implies issuing a new report. Issuing it is not it do not mean that you are required to issue a new report. It means that you need to make changes to the existing report and you need to include dash date, additional date. Additional date restricted to that amendment thereby indicates that auditor's procedures on subsequent events are restricted solely to the amendment of the financial statements described in the relevant note to the financial statements. Here, you may not be able to understand the exact meaning of that sentence. Try to read it on your own. What I explained to you about this point is, auditor need not perform any procedures between the first date and second date. That is making that has been made clear here. Please read it again. Auditor shall amend auditor's report and shall include an additional date restricted to that this additional date is relatable to only amendment. If the auditor does so, then it is said that auditor is indicating that he followed audit procedures only on, he followed some additional procedures only on dash subsequent events. Auditor's procedures on subsequent events are restricted solely to the amendment. Why the term solely to the amendment is used? Auditor is declaring to the readers of the financial statements that he has not considered events that occurred between first date and second date. We considered subsequent events only up to dash date. Then why you have given second date in our report? We performed some additional procedures on facts and we restricted our audit procedures only to those facts. We haven't focused on dash between dash and dash. We haven't focused on subsequent events that occurred between our first date and second date. Are you able to follow this or not? The next one. Provide or else provide a new or amended auditor's report that includes a statement called as emphasis of matter paragraph or other matter paragraph that conveys that auditor's procedures on subsequent events are restricted solely to the amendment of the financial statements as described in the relevant note to the financial statements. Already note is given by the management. In that case, you can include an emphasis of matter paragraph saying that we followed some additional procedures. Those additional procedures are restricted only on the amendment. We haven't focused on, please fill in this blank. We haven't focused on dash. Events that occurred in between the first date and the second date. Followed or not? That's it. This is about question number 4. Now, question number 5. Is it the last question? Can you please try to prepare for question number 5? What are the audit? This is nothing but audit procedures that are. I linked this discussion even with SA 510, SA 710, SA 710. Why? Because in SA 710, SA 510 and SA 560 were referred to. At that point only I am forced to explain you the concept of subsequent events SA 560. Okay. At that time, I told you about section 130 and 131 of the Companies Act. Revision of or reopening of financial statements once they are adopted in the annual general meeting. Sometimes tribunal may order. Sometimes the tribunal may order the organization or the company to reopen their accounts and recast or redraft their financial statements. In that case, it becomes mandatory requirement on the part of the company to do that. However, in some cases, the organization, the company may have to prepare a new set of financial statements voluntarily. In that case, that means they want to reopen their accounts and redraft or recast their financial statements. That they cannot do on their own. They need to make an application to the tribunal. If the tribunal allows, then only organization can make such adjustments. Otherwise not. Are you able to recollect them? Done. Read it. The audit procedures that were mentioned under question number 4 and the audit procedures that were mentioned in question number 5 are more or less one and the same, excepting one single point. Excepting one single point. I will try to read point number question number 5 also. You can just compare what is given in question number 4 and what is given in question number 5. The procedures are almost similar excepting one point. Instead of explaining again and again, I'll do one thing. I'll try to read it so that you'll have a better understanding. Not understanding, you'll be able to recollect it. Ready? What are the audit procedures relating to facts which become known to the auditor after the financial statements have been issued? After the financial statements have been issued. The wording that was used in the previous point is different from the current one. But before the financial statements are issued to third parties is the point that is referred to in question number 4. That was not there in question number 5. So, after the financial statements have been issued, the auditor has no obligation. I can also explain this point in a different way. First of all, try to understand what is given in the material. Then I will try to explore one more point so that you may have some more knowledge about this point. Please try to listen to the point carefully. If after the financial statements have been issued, the auditor has no obligation to perform any audit procedures regarding such financial statements. However, when after the financial statements have been issued, a fact becomes known to the auditor that, had it been known to the auditor at the date of auditor's report, may have caused the auditor to amend the auditor's report, then the auditor shall same discuss the matter with the management, determine whether they need amendments, inquire how management intends to address the matter in the financial statements. Okay, now I will try to provide an additional point to you. The point given in SA 560 is not clear. Have you observed any difference between question number 4 and question number 5? Obviously, yes. What is question number 4 and what is question number 5? I will try to explore the difference in question number between question number 4 and 5 here by writing the description. Okay. Question number 4 deals with what? Facts that become known to the auditor after the date of auditor's report, but before the date the financial statements are issued to third parties. Yes or no? So in this case, financial statements and auditor's report is strictly between dash and dash. Is strictly between the auditor and the management. That's it. They were not sent outside. Third parties are not in receipt of such a financial statements and auditor's report thereon. Yes or no? Now what question 5 says? Facts that become known to the auditor after the date of auditor's report. That's it. After the date of issue of auditor's report. This raises 2 points, or we can understand this point in 2 ways. One, financial statements are issued to third parties, but dash is not yet held. Very good, very good. AGM is not yet held. Only financial statements, auditor's report, notice of AGM were sent to third parties. That means financial statements are issued to. Have you observed the difference between the previous one and the present one? In the previous case, the auditor's report and audited financial statements are between dash and dash only, between the auditor and the company only. In the present case, the same have been already issued to third parties, but the AGM is not yet held. The second scenario is AGM is held. If you want to make an assumption that AGM is held, those 2 sections are relevant. What are they? 130 and 131. If you deem it as AGM is not yet held, that is easy to understand. The point is very easy to understand. If you make an assumption like this, the point is difficult to understand. If you make an assumption like this, the point is not difficult to understand. Now let us try to focus on the point by making this assumption. What is the first assumption? Let us assume that AGM is not held. Auditor has given a report to the management. Management issued the report to the third parties, but AGM is not yet held. It is scheduled to be held. Meanwhile, the auditor came to know about certain facts. In that case, what the auditor, and the auditor is of the opinion that had these facts were known to him at the time of issue of his report, he would have given a modified report. In that case, what the auditor had to do is the point to be discussed. I'll try to read the point very slowly. Try to read the point carefully and try to understand each and every word of it. Ready? If the management amends the financial statements, there would not be any problem at all. If the management is still willing, because dash is not yet held, management is willing to make amendments to the financial statements. In that case, point number A under this heading and previous heading are one and the same. What is that? Carry out audit procedures necessary in the circumstances on the amendment. If you fail to follow, it is your failure. It is not my failure. Don't attribute that failure to me. In question number 4 also, you need to perform or carry out some audit procedures to check whether amendment is correctly done or not. When the management made some amendment, it is your responsibility as an auditor to check whether amendment is properly done or not. Yes or no? Done. So carry out audit procedures necessary in the circumstances on the amendment. This is a new point which is not there in the previous one. In the previous case, dash is between dash and dash. In the previous case, the auditor's report and audited financial statements are between dash and dash, between the auditor and the management. So, even if you make any amendments, it is not necessary for you to inform the same to dash. It is not necessary for the auditor to inform the same to dash to the users of the financial statements or third parties, because the report is not yet issued to third parties. Whereas now the auditor's report as well as audited financial statements have already been issued to third parties. In that case, third party will obviously get a doubt, yes or no. Why the financial statements have been amended once they were sent to us? That may be the doubt to the third parties. And some of the third parties may try to rely on the old one for taking some decisions. In that case, organization would be held liable or responsible. Therefore, the auditor should ask the management to call back. The auditor should ask the management to call back the original auditor's report and original audit set of financial statements from all the parties, to inform the parties concerned that, sorry, we have issued already auditor's report and audited financial statements to you, but they need some amendment. Our auditors asked us to make amendment. We made the amendment. We are sending you the revised auditor's report and audited financial statements. Don't try to rely on the original one. Don't try to rely on the original one. Please try to make informed decisions by using the revised financial statements and revised auditor's report thereon. Followed or not? Read it. If the management amends the financial statements, the auditor shall carry out audit procedures necessary in the circumstances on the amendment. The auditor should also check or review the steps taken by the management. What is that? Steps taken by the... So management shall have to take some steps. What steps are to be taken by the management? To satisfy that anyone means third parties, who is in receipt of the previously issued financial statements together with the auditor's report thereon, is informed of the situation. Followed the next one. Unless such circumstances when law, regulation or financial reporting framework does not prohibit management from restricting the amendments to the effects, etc., then extend the audit procedures already referred to the date of new auditor's report, provide new auditor's report on the amended financial statements when the circumstances are such that law, regulation, etc. does not prohibit same points. The points that we discussed in the previous question are repeated here. So please try to go through them on your own. Okay, that's it. Over. This is about SA 560. If you need me to read the remaining 2 points also, I am ready to do that. Should I do that? This is the end of the discussion on SA 560. In tomorrow's session, I'll try to complete SA 570. I'll try to complete the reading of SA 450.